Good morning, everybody. It's February 15th, day after the 14th. So the recap for yesterday is a little bit later than usual, but as you can imagine, it was Valentine's Day yesterday, so I spent some time with the missus, she's boss, and so she pulled the strings on what I was doing yesterday evening. That being said, if you're new to the channel, welcome. Consider smashing the like and the subscribe. Helps me out, helps the channel out, helps everybody. Sharing the karma. That's what life's about. Passing things forward. With that, let's get into the meat and potatoes, and let's start off with yesterday's London session, because there's a really nice trade here which I took, which I'll talk you through. Right, so what was my bias going into this London session? My bias for the London session was we hadn't hit the consequential encroachment of the wick on the weekly, right? So if we look at the weekly chart here, consequential encroachment of the previous week, we want to make note of that, and for me that's a draw on liquidity because I still saw price as bullish, right? So we head into yesterday's price action, and what do we see? So this line here is consequential encroachment of that weekly wick, this pink line, right? So that was my draw and that's what I was targeting. So at the new midnight opening price, which is this blue line, we can see that we have a failure of this candle here to break below these equal lows. So automatically I'm looking as price is wanting to move higher. It's showing signs of wanting to move higher, right? This is a bullish indication. So it's failing to take the sell side and it's showing an aggressive move higher. So I see this as displacement to move up, and we also form equal highs. So I see these as the initial target, right? So what am I looking for? I'm looking for price to come back to consequential encroachment to retest this wick, okay? And then if I see price rally off this, I'm then looking for entries to take my setup to target the 61, right? So all of this time here, I'm doing absolutely nothing. I'm just watching price. I'm allowing it to form a bias for me. I'm allowing price to come to me, right? So the first indications I see this come back and retest this wick. So that's the first bullish sign. We then see this balanced price form, which is this down close candle, up close candle of exactly the same height, right? For me, that's a second indication that sign is bullish. We also have this displacement leg higher, and we leave this volume gap open. Price is not showing a willingness to come rebalance. It's showing a willingness to move higher, okay? So it's at this point I took my trade, right? I took my trade because I was looking for a longer run to run up to 61, okay? And I'll just bring my my trade in so you can see my trade. So I got in here at 46 and I got out at 53. And that was my morning session trade. Very, very quick, right? And price had this, this huge run here, and then fell back into this balanced price range, okay? What didn't it do, though? What didn't it do at the top at 56? It still didn't hit weekly consequential encroachment, so I still had legs in this trade. I stepped away, I had other things to do, but this is how the trade unfolded. So price came back into that balanced price, ran away, and we formed this order block. Price came back into medium threshold of that wick of the order block, right? So that could have been your entry. Your stop is below the wick of the order block. You then get this candle which dips down further into the order block, which is an IFOED. This is an institutional entry order drill, right? So for those who are in my Discord, you have a little bit of a joke about this. This is an order block with herpes, right? So price runs down into the order block and it wants to get away, right? It wants to get out of there as quickly as possible. So if you ever see this, where it wicks down below this, this is a sign to get in, and it's showing bullishness to continue, right? Price moves up into this fair value gap and fills it and retraces, but what's it retracing back into? We are still bullish and we're still targeting this consequential encroachment. So you have to frame context on a wider time frame of what is price reaching to, and this will give you confidence to stay in trades, right? So we have this bullish order block form, these two down close candle, and inside it we have a volume imbalance. So price has come back to rebalance that volume imbalance and also pinged off this order block. Your entry could have been there off the volume imbalance price below the order block, right? Price rallies away. And then for those of you who know my 3 drives pattern that not even ICT teaches, but I use this with ICT concepts and I have nailed it, right? And that's not just me being an arrogant twat. Test it out for yourself in charts, guys, right? So you have drive 1, drive 2, drive 3, and you take the entry off the second order block, right? So you can see that price, that's drive 1, drive 2, drive 3. This is a sweep of that liquidity running back into this volume imbalance that formed here. First sign price is moving higher. We get this aggressive displacement leg, and we leave an order block behind, right? This order block becomes your entry. This is where you can take your second entry, right? And price moves higher. Price again expands, and we get more balanced price range. So if you're in a trade, right, you can use this as a cushion, okay? You can use this as your support. So if you're in a trade and say you got in down here, you could be waiting for price to break above this balanced price range and you can trail your stop below it, right? So that's how I use balanced price range to get in and get out of trades, okay? So then price eventually, moves up. We get a sweep of the sell side here. And this is another indication, right? So we get a sweep of the sell side here with this wick candle which bounces straight back up. This is an indication that price is purging the sell side and wanting to move higher, okay? Ultimately targeting what? The 61. So target reached right before data. So And data, what were we talking about? For me, I had a bullish bias today. I made it very, very clear in Discord. I made it clear on Twitter. And the reason being is that we have all of this liquidity, and this is the hourly chart, right? So we have pools of liquidity sat above all of these highs. And what do we know that you need in order to punch through such high resistance? You need a big data event, right? And so in order for a big data, today, or yesterday, sorry, but it's CPI. And so CPI had the potential to run up to my ultimate target, which is still sitting there. It's still there, of 4225. And that is the volume imbalance on the daily, right? So for those who aren't aware, if we just drop onto the daily chart, we can see that we have this volume imbalance up here on the daily, 4225. So if I pull the chart out, you can see it. And that has been my draw, and it still is my draw, okay? So let's just let's dip into the action from the open. So what was I targeting? So I was targeting 4225, believe it or not. But I wanted to see price run down into a discount to trap retail into believing it was going lower. So if you look at what the market was painting, if we look up here on the hourly, right, what did we get? We had price run up and not take this. We didn't take this buy side, but it had this big wick down. What is this painting to retail? It's painting to retail that price is bearish, right? And price is going to run down. But what do we know that markets want to do? They want to take your money, right? So they're going to paint that picture, and then they're going to cause max pain, and they're going to send it in the opposite direction, right? So we were looking for entries low for it to run higher. What was price? Looking around. We were looking around this 120 level. Reason being is that it was equilibrium of this price leg on the hourly, and it also fitted in with last Monday's new day opening gap, which was around the 23 level. So we were all waiting for price to drop down to this level before moving higher. So I did take some trades, during this period. So if you just bear in 1 second, I'm sure I can bring them up. I get lost where I am on this thing. So bear with me. I promise you, I took trades. Wow, where are we? Alright, okay. What time was this? This was 8:30. 8:30. New. Anyway, for those who are in my Discord, you would have seen it. I've got multiple accounts, so sometimes it's hard to get in. I post it on my Twitter anyway, so if you want to go check it out later, my trades, they're on my Twitter. But anyway, I got in down here, and I got out here, and I got back in down here, and I got out here, right? So I absolutely slayed the market today. So yesterday even. So we had the open, and so let's break down into the open. This is obviously when data was announced. We had this big swing. I got in here, got out here, and we were watching price fail, painting the picture to who that price is going down, retail, right? So we had it the open around this level at 114, and as soon as we saw price start to rally, we were off to the races. Okay, so we moved higher, and we had this consequential encroachment of the daily, and that formed for me a level of support that price was going to rally off of. Okay. And so here's the crux, and this is a really good point. So if we have had a swing and we've had a purge of the sell side, what is price going to reach, guys? So we should all know this by now. It's going to reach for the nearest breaker, okay? It's going to reach for the nearest breaker. So where is the nearest breaker? It was formed during that pre-market hour, okay? And so we're looking at this breaker as the draw on liquidity, okay? So price runs up, and what do we want to see when price is being bullish? We want to see things left open. So I was mentioning to those in the Discord, I want to see this left open, and again it moves higher. So you could be taking entries off these order blocks, really stop just below. And ultimately, price heads up, hits this breaker, and we had to be careful. Why? Because we had this bearish order block right here. Last down close candle before the move down. If you don't know what order blocks are, I will put a card up above in the top right hand corner, and I'll put links at the end of the video so you can feel free to watch that. But an order block is the last up close candle for a leg down, or the last up close candle, last down close candle for a leg up if it's bullish. So we had to be careful. So we had a breaker block followed by a bearish order block just above. So I was expecting consolidation here. And then this is a little bit of price action that a lot of people may overlook, but it's important to look at, right? So we're looking at how the prices are interacting with one another, and when we see that price is failing to get above medium threshold of this order block, we are starting to look for signs of weakness for price to move down. So I alerted everyone in the Discord, price is starting to look heavy, right? And the reason being is we had this down close candle, and then the following candle, we had this big rejection, right? Price was not wanting to move higher. And then the following candle after that failed to get above even equilibrium of that wick. So price is becoming heavy, right? And then look what happens on this candle. We get that move down and then move higher. So it bounces off that consequential encroachment of the weekly, moves higher, tries to have this little feeble effort to make a run again. Again, can't even get to equilibrium of that wick, and what happens? Price absolutely tanks. So being able to read these individual candles is hugely important. And that's a good little there's a good little tip in there. So yeah, make note of that. And then, so what is price running to do? Price is then obviously coming to purge the sell side back on this side. I didn't take any of this leg. My trade was in the AM, but I did take trades in here. Again, I'm not going to try digging them out on my platform because it's the following day. So I've got trades this morning. That yeah, and it's just hard to find out. And I've got multiple accounts. So what we're looking at. So we had this, right, and I mentioned this in the Discord, that this is an institutional entry order drill, right, on the hourly, okay, and this is how it looks on the 1 minute. So what we're looking for, price, if we look on the hourly chart, which is this top right, price on the hourly dips just below the previous hourly's wick, right, but dips further into this order block, which is formed here, right. Forget this candle here, we're looking at this hourly here. All of this time here hadn't been printed yet, so we're looking at this hourly, this one here. Price dips below this hourly, but dips into this order block. And then we get this massive rejection candle, right? What do we know about rejection candles? We're expecting price to come back into equilibrium of the wick to retest it. You'll see this on all time frames. My favorite is the 15 bellwether chart for rejection blocks, but it is true on any time frame. So we had the purge of the buy side. It was trapping retail into believing it was going to move lower, and we had this huge rejection. So at this point, I'm looking for price to do what? Retrace. And so what I like to do with my fair value gaps is I drag them across, especially when we have fair value gaps that are wide like this and they've just been blitzed through. These then turn into support and resistance depending on which way prices run through. So these turn into resistance. So I mentioned in Discord, watch out for the fair value gap here because this is likely to form a level of resistance, especially as we were running into the lunch hour. However, I did take this trade between this leg. And so the trade was, of consequential encroachment of this week, we had this fair value gap, price dipped into it before moving higher, right? That was the trade. So lunch hour, we then get, this gets quite interesting. So for those of you who know my 3 drives pattern, we have it here again, believe it or not. So let's just move this out of the way for a second. So what do I talk about? So we have we always look at it as a reversal. So at the base of a run, okay, or at the top if it's inverted. And we actually get it both times here. But so let's have a look at it. Let's break it down. So we have drive 1. Drive 2, drive 3. We look at the order block in the middle, and that's our first entry, right? That is our first entry, right? Honestly, ICT doesn't even teach this, so you guys are getting pure gold here, and you know, take it or leave it. This is an order block. You take the order block in the middle drive 2. That top of that order block is your first entry. If you miss it, you wait for the displacement leg off of the last drive, okay, and you look for the order block. That is your second entry, okay, and that's where you get in. Anyway, so price moves higher. What are we targeting? After sell side is taken, what's it going to run for? The nearest breaker block. So it's going to run back to that, right? If price has still got an ultimate objective, which is bullish, right? So we get this consolidation during the lunch hours. As I say, don't trade through lunch; it's a complete waste of time. However, if you'd got in here, you would have just been in your trade pre-lunch. You would have just been riding it out. Okay, I wasn't actually at my screen to take the trade, but this was an absolutely valid trade, and you would have just held it right through to the PM session. What do we get? So we get price almost makes it to the breaker, but what do we get? We get bearish 3 drives. So we get drive 1, drive 2, drive 3. We take the bearish order block, and we're looking to see it fail. So it fails, medium threshold of that order block, and it pulls away, right? Comes back up, fails medium threshold of this wick, fails again. But then price obviously runs down into this little fair value gap, and purging the the after hour after lunch liquidity, the sell side, and we're looking at the 2 o'clock algo. And so what we're thinking, so we're still looking at price to run to this breaker, so we're still bullish. We hit the 2 o'clock algo, and what does price do? It runs up to the breaker, and so that would have been your ultimate target, right? So that is the breakdown of yesterday's action. I just want to finish by showing you this, guys. So this is my overview of the market, right? And it's just my view, okay? And it comes down to my 3 drives pattern, believe it or not. So this happens on all time frames, and as we know, is fractal, and this is how I see it. Okay, so let's just move that out of the way for a minute. We have drive 1, drive 2, drive 3, displacement leg higher, price comes down, and we've swept. So this has swept all of this liquidity. So this is a market maker's buy model, right? Market makers have bought here, and what do we know that markets want to do? They want to distribute, right? So they've moved price higher, and then we've come back and we've tested that order block that is formed in the displacement leg. So it's actually clearer on the weekly, right? Displacement, this is what I talk about. The sweep, the displacement, it leaves the order block, that's your entry. price has moved away, come back, and re-dipped into that order block. So what is price likely to do? It's going to want to go and distribute those longs that it's formed here. I personally don't believe that is a big enough range for market makers to see as enough to sell their longs, okay? So they're going to be trapping people who are going to be looking at this at sort of 4,200 as a ceiling, and then they're going to bust through it at some point. So you can see that price came back even on January the 30th into this order block, and it's moving higher. For me, my short-term target is this 4225. However, I can quite easily see us blitzing through this, all the way through this liquidity. So I know there's a lot of talk about soft landings, and we could just chop in this range for a bit, but all of this, if it does happen, is accumulating for it to punch through higher. So I just wanted to end with that, because I thought it was quite interesting, and yeah, I'm sure you'll find that useful. So that's going to wrap up my today's review. I hope you found it useful, and until next time, trade safe, and I'll catch you in Discord very, very shortly. Take care. Bye.